This is a demonstration on how to create a very basic rolling income statement using the Sage Intelligence Report Designer add-in. We will be using the General Ledger main accounts to report from with current period figures, and our example database is from the Sage 100 ERP ABC Demo Company. Before beginning, run the Sample Report Designer add-in report from the Sage Intelligence Report Manager. Once the Microsoft Excel workbook has opened, you will notice that it contains multiple standard reports on separate worksheets. Before continuing, create a new worksheet and ensure that the Report Designer add-in task pane is visible to the right of your worksheet. Set up your worksheet with company, current year, and current period by dragging the current year and current period formulas from the Formulas group in the Report Designer add-in task pane on the right to their respective cells. Drag and drop the main accounts from the Lists group in the task pane. You will use this list to help create your report. Delete the balance sheet accounts. In this example, these are all the rows with an account category of assets, liabilities, or equity. Delete the columns which are not required. In our example, these are the account group, account type, and cash flow type columns, which are used when generating a cash flow statement. Leave the account category column for the moment. Add the period heading and reference the current period in the cell below the heading. Ensure to make it an absolute value. To do this, reference the cell and then press F4 once to fix both the row and the column. Then reference the current year above the heading, again ensuring that it is an absolute value. Remember that we are creating a rolling income statement in order to compare the current period figures to the figures for the required number of previous periods. To reflect the previous periods, the formulas must change for the next column. We need to validate both the period and the year using standard Microsoft Excel if functionality. Calculating the previous period means that we need to take into account the change from January, period 1 of the current year, to December, period 12 of the previous year. To achieve this, we use the Microsoft Excel if formula to say that if the period in the previous column -1 is less than or equal to 0, then take the result and add 12. Otherwise, enter the result. For example, if the period is June 2010, the previous period would be May 2010, and the formula would be false. 6 minus 5 is not less than or equal to 0, so we would use the second criteria and subtract 1 from June. However, if the period is January 2010, then the previous period would be December 2009, and the formula would be true. 1 minus 1 is equal to 0, so we would use the first criteria, subtracting 1 and adding 12 to the period. We now need to perform a year check. If the current period is January 2010 and the previous period is December 2009, the year check ensures that the correct year is used. Again, this is an Excel if formula, which states that if the period in the previous column minus the period in this column is less than or equal to 0, then subtract 1 from the current year. Otherwise, enter the current year. Drag both formulas across to the right for the number of previous periods required. Cross-check that the formula works correctly by changing the current period to the first one and then to 3, and ensure that the correct years are reflected. Select the Formulas group from the Report Designer add-in task pane and drag and drop the actual formula onto your worksheet in the same row as your first account. Then change the cell format to Accounting. Change the actual formula to link to the correct account, year, period, and company by clicking the FX icon and changing the function arguments, or alternatively, typing the changes directly into the formula area. Change to absolute cell referencing where the cells remain constant. To do this, reference the cell address, then press F4 once to fix the row and the column, twice to fix the row, and 3 times to fix the column. Once a specific row or column is fixed, the formula for the referenced cell will not change, even when the formula is copied to other cells. Use Microsoft Excel's autofill functionality to copy the formula down to the remaining accounts. Remember, all revenue accounts should reflect credit balances, which appear as negative amounts. Change the sign for these accounts by replacing the equal sign with a minus sign at the beginning of the formula. Cost of sales, expenses, interest, and tax accounts should have positive values because they are usually debit balances. In these cases, the sign should remain unchanged. Insert a row below the headings and add a sales title row above the revenue accounts. Use the Report Designer add-in range to sum all the sales accounts. A range consists of two values where you want to retrieve data for those two values and every value between those two values. An example would be when you want to retrieve an amount for all main accounts from 101 to 105. In the cell which contains the GL link, you would type 101 to 105. This will give you a summarized value for the accounts 101, 102, 103, 104, 105. Copy the formula up to the sales row and cross-check that it balances by highlighting all the sales rows and checking the sum in the Excel status bar. If it balances, delete the sales accounts. Repeat the process for cost of sales. Insert 3 additional rows below cost of sales and add the gross profit equation, which is sales minus cost of sales. Add an expenses total row and copy the formula up. Cross-check the sum and delete the expense rows. Add a net profit row with the net profit calculation, which is gross profit minus expenses. Delete column C with the account categories as they are no longer needed. Copy the formulas across to the right for the remaining periods. Delete the main account code and description headings and format the report layout as appropriate. Finally, run Create and Link Template in your Report Manager to save your report for future use.